following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. Well, you're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Well, yes, Tom, your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Manifest your true intentions. Regardless of what language you speak, your intent will be manifested through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials down 16, NASDAQ off 24, S&P's flat. Gold contract up $8.80, trading at $12.87 an ounce. Silver. Where is she? Up 18 cents, $16.62 an ounce. Let's go over to the gold market right now. So, gold right now catches a bid last week. We get follow through out here today. You're inside the larger range. Once we got back inside the price point of $12.68, which we did on Friday, get you in the larger range, number one. 13.12, which is the swing high from the 16th of October is game now, but where I expect we're actually going to go is September 8th. September 8th's the baby, folks. 1365.80. We take a look at the GLD. This is the Street Tracks Trust. Street Tracks Trust right now is at 121. That's making its way. It's already into the larger range. The number we're looking at there, you get the first swing high of October 16th, which is 123. The larger one, September 8th, is 128. We get over and we take a look at the silver contract. So we needed silver to catch a bid, folks. And what we got here is that we're up 19 cents. This is just, we need a few more cents to get back in the range. It's a good move today. You've done 40,000 contracts. The range we're talking about is 1665. You're back in 1665, you get action. That'll get you up to 1759, and then we'll see how it handles that level there. The September 8th, September 7th, September 8th in silver is 1836. We go to look at the SLV. SLV, now for Friday, caught a great bid. Good bid today, but you had the volume on Friday. What's going to be intriguing here coming into the close is to see if we actually get the volume on the close also, which we very well could. The SLV needs a few more pennies right now at 1562. That's 1565 also. Bonds. Now let's go to the note and bond market. So last week, notes got smoked. They broke their consolidation. The bottom of that consolidation was 123.27. This is the 10-year. We're at 123.20 right now. You got light volume coming in, 280,000 contracts. That's light. It's a holiday trading. There's no two ways about that. Bottom line, though, I do want to see. I want to see it get back inside there, and then I want to see a sign of strength. If we take a look at the TLT, the 20-year bond fund, that you're bouncing today, light volume. You're up 54 cents, 2.2 million. The difference with the TLD is that it did not get down into its swing point. So that's strong in itself. The swing point we're talking about is the October 25th and 26th lows of 122.43. The 30-year bond also didn't break any major swings. 30-year also didn't make it down into its lows from the 25th and 26th of October. 30-year right now is repairing damage from that wide price spread that we did have last week. That's on Tuesday. We went from a price point of 153.15 to 151.11, and you had some juice behind the move. We had 327,000 contracts. Now you're going into a lot more, but bottom line, you know, that was a good expansion of volume. That 30-year, you know, bottom line is saying, guess what? It wants higher price, lower yield. Right now we're 2.465, which is at the higher end for just about the year. When we take a look at this yearly basis, the low for the year thus far was 2.03. The high was 2.62, and right now you're at 2.46. Oil. Let's go take a look at this oil. So the oil's caught a nice bid. CL, where are we? Okay, so we're up a 2.4%. You're trading $59. Oh, this is a breakout. Oh, interesting. Okay, so now we're talking here. Okay, so real question is, where is A? Well, here you go. Yep, I want to do the continuous contract because this looks to me like this contract, I believe the last time we did this, it's either 62 or 65. That's where it's going. Yeah, 62. 62.50, yeah, 62.50 is your swing. That's where it wants to go. Now, it's going to get intriguing here. This is going to be pretty intense watching this market, and this is why. So we came down so fast, folks, in 2014. One of the legs down took us from $107. That was in June. And by, that's June of 2014. And by January or December of 2014, we were at 52. So we went from 70, we went to 107 down to 52 in 5 months. So what happens is this, is that you go up to the swing point we're talking to 62.58. That was May of 2015. You'll get up into that. But if this has any strength, there's no reason that this can't get up into, this would be really strange, man. Yeah, this can go to $75, man. That's pretty intense. $75, that is one big number, man. Now, and if you want to see deviance, folks, this is about as deviant as you can get. You go over to the natural gas market, and we take a look at natural gas. Natural gas today is down 1.27%. And if we take a look at this, and on the update, I went over that in the update, and this is just absolutely amazing when you take a look at it. Let's see. Okay, and let me pull this up. Because what it's about, what the story's about, is that New England, it's freezing up New England. For this time of the year, they just drew down 30% more than they have ever drawn down. And here it goes right here. You stay right there. Natural fuel jumps 31% as Chicago faces sub-zero readings. But guess what? Wholesale market's not moving. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 19. You get the Nasdaq off 24. S&P's are flat. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday during the first break. Don't forget, folks, you can get all the programming at TFNN right on your cell phone. You go to TFNN.com. You just hit Tiger TV. As you're over there, Basil's got a great show every trading day, noon to 1 Eastern Standard Time. Also, has a great newsletter. The way you can test drive the newsletter is you go to TFNN.com. You go at the very top, you can see newsletters. Hit newsletters. You'll see trading newsletters. See the opening call. Test drive it 30 days, absolutely free.
Hi, Tom. How are you?
I'm doing good. Yourself?
Very well, thank you.
I heard it's going to get cold up there.
Well, we've had some pretty cold weather. What happened was, I always think that whatever we start off doing, we kind of repeat through the year, so that if we have snow and then a quick melt, that kind of seems to be the picture for a lot of the winter. This time we had a layer of ice. It was like a half inch, and then there came down the rain, and it was way below freezing, so we got this ice. Oh. Ice is terrible.
Yeah, bad scene. Yeah. Right, no doubt.
It is. So it's cold, yes.
So, market-wise, what are we looking at?
So there are a couple of things going on. I sent out a lot of information over this past long weekend for subscribers, because I just wanted to give us an overview and to see what we're looking at. A couple of things struck me as very important. One is, it looked as if the upside right now appears to be fairly limited in the key indices. And as a result, I decided that we would start taking some short positions, something we haven't done for a while. At least we haven't really thought about it in terms of the key indices. So although we just started a position in the Dow on the short, small position in the Dow on the short side, the Dow, the way it's looking, you'll see that on the left side here is the daily chart, and that shows you that we've had 1, 2, 3. This is the 5th session since the high of the 18th of December at 24,876. We've only gone sideways, but look at the way the MACD, the moving average divergence, has just crossed negative today. Okay. And the stochastic ride is still good at 85%. It is coming down. It's weaker than it was in the previous highs. And the on-balance volume, that's the counting the last volume and adding it as a running total, or subtracting it. If there's a down session, you subtract it, and if it's up, you add it. That's been coming down. The weekly charts are still very good, but I'm a little concerned that there was this doji candle, a little tiny candle, like a plus sign last week in the weekly chart. And the monthly chart is still very strong, and the technicals and the weekly are still strong. So my thinking here is that we could go sideways choppy, but I'm thinking more likely slightly lower highs, slightly lower lows. But what's interesting is in the QQQ, which is the NDX 100, this is a little different story. We actually started a short position last week. And one of the reasons is that after the 18th of December, the high of 158.77 in the PowerShares QQQ Trust Series, this is the NDX 100, there was a candle that I've always noted is a very, I call it the Chapman Wave Roman candle. Just it's kind of a little bit of an inside joke. Mostly the candle, when it's got this tiny little wick, which is like the fuse right there. That was on the 20th of December, so 2 days after the high. There's a candle that opens and makes a fractional new high, drops very sharply, and then closes about halfway to just over halfway above the entire length of the candle. And I've always looked at this as, I call it a Roman candle, because what happens is that if the price starts to trade within a day or two, halfway into the wick, there's a really good chance that not only will it test the low, it'll break the low. And if that happens off the top, that's usually a sign that says you're going to start to see some weakness. And that's exactly what happened. We were short, and then on Friday, it just touched the 9-period moving average. That was the first time it touched the 9-period moving average since it broke above on the 8th of December. And then look what happened. So today, Apple came out with news. But look at the way it's under the 9-period moving average. But the weekly is the one that I'm really looking at. So the daily has technical weakness and price weakness, but the weekly chart, until it really breaks the 9-period moving average, in other words, it needs to close on a weekly basis below about 154.50. That's 2 points low. That's quite a lot. I'm calling this just a short-term trend. We have to go one step at a time, because you've seen buying just come zooming into this. But I am concerned that the QQQs, when you look at some of the leaders in the NASDAQ, I think they're starting to run out of energy. So I don't know if they're going to chop to the side right here and just go into a rectangle formation. But I am starting to see weakness for the very first time. So we try to treat it as a trade. But we still have, I spoke to you a while back saying that we have some steel stocks. We have one now that's Reliance Steel, and it's now gone into leg E. It's at, that's the SLX. So that's the SLX is the S&P. This is the steel sector. So we have a particular one that's Reliance Steel. And look how nicely this one's run up. We have two long positions in the low 80s, and now it's at 87.16. And there's a pattern that I always look at, which is what I call the left side, right side price time match. It looks like a cup or an arch. So we've already done the arch, now coming into the cup. And the left side level that I'm looking at is 88.58 over the coming weeks. But so far, it's doing very nicely with this pattern where it makes an equal number of bars down as it does to the upside. So that's acting very nicely. So we're very selectively still on the long side, but we've just started looking at the shorts, and we'll see. And the week's young, you never know. But so far, I think that most of the gains, most of the areas that were potentially very good for the strong side of the market are starting to weaken a little bit. So you see a rotation going into some other areas, and I think steel is one of those areas.
And, folks, if you come over to our website at TFNN, you can test drive Basil's newsletter, 30 days absolutely free. You go to newsletters, you go to trading newsletters, you see the opening call right there. Yeah, this is going to get intriguing, too, Basil, like with the, the tax bill coming in, everything coming in at the end of the year.
Right.
And the real question's going to be what, was intriguing. Last week, folks, Nike came out with numbers. So check this out. This is when you hear that, so here, let's go look at Nike for a second. So Nike comes out with numbers, right? Nike 63.74. They got down to a price point of $60 on Friday. Big volume, came all the way back, right? So in that aspect, yes, it come back. What blew my mind about Nike, though, was in their press release. They were blaming some of it on their effective tax rate. They said last year their effective tax rate was 2.2%, and their effective tax rate for this quarter was 11%. So it goes to show that none of these there's not a lot of these companies that have paid 35%. That's the bottom line. So it's going to be like, okay, how much are they really going to make if people are banking that all of a sudden this big tax bill? It's certainly not going to be Nike. So, you know,
and not only that, you know, until everything goes through the taxes, the accountants and everything, you don't really know what's going to come up in the end.
Right.
So I think this is just the beginning of what we will see this coming year, which companies benefit and which don't.
No doubt. Basil, thanks so much. You have a great one, a safe one. Of course, we look forward to the show tomorrow.
Thank you very much, Tom. Happy 2018.
I know, 2018. Here we come, baby.
That was quick.
Thanks, man. Stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go take a look at some of the higher volume stocks out here. And this is no doubt a low volume market, will be all week. Right now you have GE, just can't get away from itself. That's up 4 cents. Micron Tech's down $1.79. You have Apple down 4.63. Apple's trying to battle it back. There's no doubt, and you're going to have analysts battling it back and forth too. An analyst just come across the tape here saying that no, That information is, he's not agreeing with that information, let's put it that way. That is out this morning, so the Bulls and Bears will be out here, no doubt. You get Freeport McMoran up 53 cents. This thing's on fire. Let's go, we take a look at this. What you're going to see here, this just came off the lows, and you go back a couple weeks, you're at $13, you're at $18.63 now. And this did have a volume when it broke the whole consolidation. So this thing's on its way up to this $23 area. Right now you're at $18.63. And what that's saying is that's saying that copper still continue to catch a nice bid. That's the bottom line. You have Marbell is up 6 cents right now. You have Intel down 66 cents. The Ford Motor Company's flat. NVIDIA is up $1.92. Now it's going to get interesting about as we come into the end of this week. These chips have got killed, folks, okay? You know, well, no, they haven't got killed for the year. They've made a fortune for the year, actually. Since November 27th, they're down, well, this is down, let's see, down about 10%, $217. Yeah, and we're at 197 right now. Now, what's happening here is that this is coming right back into its downdraft. So it's going to need a lot more juice, but it looks like it does want to get up to the 200 area one more time. That's the highs of the downdraft on December 4th. You know, we were talking about the weather. We're talking about natural gas. Natural gas still can't catch a bid. And let's see what they're saying. So for many parts of the nation, a prolonged punishing cold is just getting started. The cold snap that descended on much of the nation from the Rockies eastward Christmas Eve is predicted to become further entrenched and even more biting in the coming days. The worst of the cold may grip the central U.S. Saturday through New Year's Day, when temperatures may fall more than 30 degrees below normal. Man, oh man, holy cow. The first cold wave arrived over the weekend into Christmas Day in the Pacific Northwest, the Northern Rockies, and much of the eastern half of the United States. The initial blast supported, you know, blanketing half the nation with snow on Christmas Day. That's the highest percentage for December 25th in 5 years. The first time on record that Seattle had at least an inch of snow on the ground for both Christmas Eve and Christmas Day. That's a trip. So the Arctic air is coming down over the Great Lakes and did produce 53 inches of snow in 30 hours in Erie, Pennsylvania. Holy cow. That's insane. That's the biggest two-day snowfall on record. Man, oh man. We get action everywhere here. On Tuesday morning, a reinforcing blast of cold sent wind chill temperatures across North Dakota, and we got our man Jim from Minnesota. He was calling this morning, crashing to minus 40 degrees. Minus 40 degrees. Could you imagine? Bottom line, wind chill factors this morning are 30 to 40 below zero and colder across North Dakota. And they're saying, if you're out there, you better really be careful being outside. Okay, so the extreme cold over the northern central U.S. Tuesday is going to be up in the northeast by Thursday. The same, let's see. Holy cow. The same area, so check this out. The same areas in North Dakota and Minneapolis witnessing minus 40 wind chills today are going to see these levels plummet to minus 50 and minus 60 by the weekend. Jim, you better get your family on a plane and get down to Florida, man. Holy cow. The wind chill will be with us through at least New Year's weekend. The average forecast temperature at Central Park is 19 degrees, where they don't expect the temperature to rise above 7 degrees. Oh, no. They don't expect it to rise above the 19-degree level for the next 7 days. That's pretty intense, man. That is some cold weather, folks. When you start talking about into the minus 40 and minus 50, and if we go back to natural gas, it's I don't know what will get natural gas higher if natural gas is not moving, and you're talking about those types of temperatures. That is like just so far over the top. It's unbelievable. Let's go to the GDX and take a look at the gold and silver equities. GDX out here, you get a slow day, yet you're still catching a bid and you're still catching volume in it. We've done 16 million shares, which is good volume for a slow day. What it also does, the GDX folks puts quite a bit of volume in at the close. So we'll see whether it gets another 4 million in at the close. Right now you're at $23.19. You're over the minor swing. The minor swing is from the 28th of November, and then I suspect we're going to go after that major swing, which is $23.99. We get through that, and then you get that September 8th is coming into view. It's coming into view a lot sooner than the last time that we went up there. You know, the last time, well, we got up to September 8th. That's what was going after the February 10th swing point. This is the consolidation we've been in. So it's going to be important as to how we run up here. What the difference is that the best runs, if I let me pull this back a little because I want to show you something that I can keep this on here, I believe. Your best runs end up being, in December. So when we go, well, I guess it was January in 2016. Let me go back to, it was January in 2016. That was an incredible run. We went from $13 in the GDX up to 31 nonstop. That was the highs in July and August, Then last year we went from $18.50 up to 25. That wasn't too shabby either. If we actually go look at the contract, the gold contract looks that the last 3 years that we have bottomed in December. We bring this back, and what you're going to see is that in 2015, the low was 1,046. In 2016, 1123. And if we got it this year, it's going to be pretty cool because you're talking about a nice high low, 1236. Last year, 1123. The year before, 1046. So that's interesting. So from 2015 to 2016, you had only the difference of approximately $75. Oh, is that right? That's 54, 64, 74, $77, And from last year to this year, if in fact that's the low, it'd end up being 110. So that's not bad because what we also did is that we back down much less of a retracement. You stay right there, folks. We come right back. Our phone number is 877-927-6648. Dow Industrials right now down 25. Nasdaq's off 29. S&P's are flat. We're coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 27. You get the NASDAQ off 28. S&P is a flat. Let's go over and take a look at the XLE. So you get the oil market moving. You get the XLE up 56 cents right now. That also broke topside last week and did have volume on this break topside. So let's put this back on a weekly basis. Okay, so now when you get game, if it's 72.53, game is the lows of the high of 2016, December of 2016, which is the 75.52. And that's still, yeah, you get a swing point from I see what's happening. So you get the lows of the high, and then what you also have is you have the swing point. This is 78, 74 to 78 is going to be game. It's going into a huge amount of flack there, but I suspect it's going to be game. We go take a look at the XLF. The XLF out here is trading 27.94. This baby's been going sideways for a couple of weeks right now. Now, what's intriguing about this, if we go COF, and when I was just talking with Basil about the aspect of who the winners or losers are going to be inside some of these companies and what people are depending on, it's getting pretty cool watching how this may shake out. Because what you had out here this morning is Capital One came out. So check what come out. They come out with this press release. Capital One cites near-term adverse impact to financial position as a result of anticipated reduction in the carrying value of certain tax assets and additional tax expenses resulting from the Tax Act. It estimates that it's going to take a $1.9 billion charge primarily due to write-down of deferred tax assets as a result of the Tax Act's reduction in the corporate tax rate, a one-time tax on unrepatriated foreign earnings, and other anticipated impacts. That's pretty intense. Remittance capital plan as required for the Fed 2017. Now check this one out. They are cutting their repurchase of common stock of up to $1 billion for the remaining 2017 CCAR period, which ends June 30th, 2018. So they're not buying any more stock back. They're going to have a hit on their balance sheet of $1.9 billion. And what that is, folks, is this. So watch what happens. Is that when you have the aspect of 35% corporate tax, whether you pay it or not, when you have the aspect of charges against that on your balance sheet, that asset, that liability actually turns into an asset. So the liability that was on there for tax losses actually was an asset. They're going to have to they have to write that down from the 35% to the 20%, because guess what? 15% is gone now. Bingo, gone. So bottom line is that there's going to be a lot of these different things that are out here. And as I said, when Nike came out with what their effective tax rate was, the effective tax rates are what run everything. That's what it really comes down to. You have your tax rate. It's just like, what is the bond rate? What is the inflation rate? What is the effective interest rate? So when you cut to the chase, the effective rate is what you're going to be looking at. And there's going to be a lot of spins in these different companies. So if we bring up the XLF again, I'm just curious. Yeah, it still looks like it wants to go to this. Let me pull this up. So there's not much stopping this to at least trying to test the highs of 2007. He hasn't got there yet. The highs of 2007 is 29 and 30. Right now you're 27.96. This thing went down to 477. So that was quite a hit on the way down. There's no two ways about that. That's when every bank, of course, just went south and went south in a large way. If we go take a look at good old GE, GE still having a hard time holding any type of price. GE, $17.43. And bottom line with GE looks like it has $5 written all over it. Well, no, first, $11, $11.35. 572 is the low of 2009. Now, the high of that low is 11.35, but looks to me like it's going to just drift down there. If we go back to the first of last year, who would ever thought that GE would get cut in half from 32 to 17? Well, we've been looking at this high volume low for a long time, but that, even thinking that yes, it's going to go down there, that's a quick, 50% haircut in 1 year. There's no doubt about that. And when you take a look at their business, when you take a look at the amount of employees they have, when you take a look at how much is probably still hidden that they have to just get rid of and hope that they can slide it out under the covers without people realizing it, yeah, they got big problems. GE this year plans on taking in $126 billion. 2013, they took in $146 billion. So you can see this is a company that is contracting dramatically. They plan on making more money this year to the bottom line. We'll see whether they can do that. Their numbers have gone down since 2013. This is the first year that they're saying the number's going to go up from $1.09 for a full year to $1.13. We'll see, and we'll see that pretty quickly, I expect, because when you get a new CEO, which they do, most of the time, what most of them are going to do, and you can't blame them, is they're going to throw everything in the bucket. So because they have a few years to get some business going. If we go and take a look at the copper market, copper's still on fire. Copper has got some good action happening right now, and you're at 4 pennies. You're at 327, and that's is that breaking over its highs? Just look at this; it's right at its high from the October 16th level. If we break over that high, folks, you're going to have some good action here, man. And the way that these copper stocks are trading, let me go SCCO and see what SCCO is doing. Yep, SCCO's up, Freeport-McMoRan's up, TGB. These stocks, TGB's up too. They're all liking higher price. So the copper market, bottom line, base metal, yes, that's going higher. Good old King Dollar still can't catch a bid. So King Dollar coming into 2018, DXH looks that that selling's going to continue, and the high of King Dollar was January of 2017. That was 103. Right now you're at 92. You have a swing point down at 92.130. We're at 92.810, and then your major swing is down at September 8th. September 8th is the benchmark, and the metal market on the way up, on the dollar on the way down, on the bond market on the way up. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now trading down 13, NASDAQ off 25, S&Ps are flat, gold contract up 9.20, that continues higher, 12.88, silver up 18 cents, $16.62. We'll come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And, you know, I'm staying on this natural gas market, and I'm telling you, at this point, I'm just glad I'm not trading natural gas. It's almost... It's really hard to comprehend. The reason being is that natural gas keeps getting sold down. I just read the article about how cold it is in the United States, right? But listen to this one. This gets intense, too. So all these different reasons why natural gas, you know, basically intuitively, well, fundamentally should go up. China imports of liquefied natural gas from the United States jumped last month as the country snatched up a record volume of fuel to meet surging demand for heating and industrial use. Listen to this number, folks. Shipments from the U.S. totaled 407,325 metric tons in November. Now, that is up from nothing last year the same month, and up 57% from October, placing one of the world's newest LNG sellers, which we are, as the third biggest supplier to China behind Australia and Qatar. The world's largest energy user is struggling with winter natural gas shortage. after demand surge this year, after the President Xi Jinping fight against the smog, which has focused on cutting the use of coal in favor of cleaner burning fuel. Bottom line is that it's pretty amazing. You know, you take a look at the liquefied natural gas market, take a look at how cold it is, and guess what? Thus far, this natural gas market just keeps getting sold. So will it bottom out? Well, thus far, it looks to me like this low is going to get tested again. The low we're talking about out here is at 256. Right now, you're at 262. That's on the small basis. On the larger basis, it looks like, you know, when you put this back, it looks like the, was it? Yeah, 252 is the number. 252 wants to get tested. And, hey, we'll see how it shakes out. Pretty amazing, though, when you take a look at that aspect. Dow Industrials right now, folks, down 21. Nasdaq's off 27. S&P's are flat. What you're going to have out here, you have a sideways market, low volume. Right now, we're only at 300 million on the NYSE. And if you take a look at the Nasdaq Composite, you're at 1.1. Have a great one, folks. Have a safe one.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.